Hello and welcome everyone to Introduce Investor Days. My name is Jesper Birch Jensen and I work as an equity research analyst here at ABG. And with us today we have the CEO of Net Gaming or Acroud, Robert Andersson, and also the CFO Gustav Wadenbring. So with that said, please go ahead, Robert.
Thank you very much. And I think we go to the next slide where we have the agenda and the presenters. So I thought I was going to share a little bit of my overall reflections and to start with, and that also is a good segue into the introduction. So my name is Robert Andersson. I've been the CEO now for roughly about 6 months. So I joined the company in early March, which is... Well, now I've been here 6 months and we have had certainly a very interesting time during these 6 months. It was a couple of weeks before Corona really hit. And before that, I was the CEO of Labs, which we'll also present later in the day here. And now I'm a part of the board at Labs, and I'm also part of the board in a company called Saveland. Before that, I was the CEO of Catena Media for 3 years. So that's a little bit about me and what I've done before in this space. And Gustav now to introduce him.
Hi, my name is Gustav Wadenbring. I'm the CFO of Acroud. I've been in the company a little bit longer than Robert, almost 2 years now. I have a short background, 13 years from Deloitte and Touche, where I've been an M&A expert and plus 200 transactions in the background. Also been CFO for private equity in companies owned by private equity companies and putting them on a stock exchange. So I worked a lot within TMT, media, gaming in fast-growing companies.
All right, so the agenda then is a bit reflection on what we are, some highlights, and then Gustav's going to do the financials, and I will then do a short summary, and then we'll go to Q&A. So we go to the next slide, which is overall reflections. I mean, we can probably pass that introductory slide and go to the actual reflections. So this company has been fascinating me for a while, and I had the opportunity to come in as a CEO when I started feeling it was time to move on from Labs and was offered to move into the board instead. This appeared, and it's certainly a company that, if you look historically, has had its challenges, especially in 2019, and I felt that it was in need of quite drastic change and a new strategy in order to kind of spur on the growth. So since I've come in, we have worked really hard on change management and driving a cultural change. Part of that is that we have changed the name of the company, so Net Gaming is no more, which is important to understand. That's a legacy. Part of that name change also came because basically Net Gaming consists of one company, and that company was called Highlight Media. So it's a listed entity. Now we have kind of put everything under one brand, which is much more clear both to employee branding and also investors. What we have in this company and what I saw is that there is clearly talent that is not misused, but has not had the right driving force behind it. It also has some extremely strong assets in poker listings, probably one of the biggest affiliation sites within poker in the world. And then some other really strong domain names that can be built out to further the company's growth. We have done a lot of restructuring on the Q2, where we took a lot of one-off costs. We basically shut down our Swedish office, and we've shut down satellite offices in other places as well to kind of streamline the costs, which was quite easy when we streamlined the processes. Another big reflection is, of course, what's kind of impacted everyone is the COVID and what happened for us. We saw significant growth in the beginning when everybody went into lockdown, but we were really humble in understanding that, you know, it's not because all of a sudden after 3 weeks with me at the helm are doing fantastic, but it coincided with COVID. And what we're seeing now during the summer months and the ease of lockdowns is that we are normalizing traffic levels, so to say. And with that comes like normal challenges, but we were always aware that it was a bit of a boost with that. So we are really now focusing on North America and the opportunities there, but also in other fast-growing emerging markets where we see then strong organic growth. So what we are doing now in 2020 is adapting the company for further growth. So we're kind of putting all the building blocks in place so that we can grow really fast in 21 and 22. So this is, let's say, the foundation for that growth is being built and changed around during this year. That's been the focus so far. We are moving on to the next slide, which is ongoing operative initiatives. So really focused on operational efficiency, and we have done like a competence switch in terms of staff, where we have we are not more or less people, but what we have done is kind of remove irrelevant knowledge and replaced it with kind of really solid, strong knowledge that helps us to go where we want to go. We've strengthened the US team significantly. We have submitted a lot of license applications finally. They are being processed now, and we are hoping to have a fair bit of approved licenses quite shortly. We have managed to recruit some really leading key account people to the team, so that's going to strengthen our sales. And of course, we continue to develop our own platform, and we are in also a transition year where we are putting old assets onto the new platform. And of course, we are developing our sports betting offering. It's something that we historically have been weak in, and something that there was an acquisition prior to May. But let's just say that we have only dipped our toes into sports betting so far, and that's a huge upside down the line for us when we go into 21 and 22. So moving on to the next slide. Then a little bit about what is a crowd, and you introduced us as net gaming, but we are a crowd, and I just wanted to dig into this a little bit. First of all, what is a crowd? Well, we're a company that works with lead generation. We're an affiliate company, especially in the iGaming space. We have a small finance vertical as well in the States. But we are an affiliate company to the likes of Catena Media, RakeTech, Better Collective, although Better Collective is very focused on sports. We have poker and casino as our predominant verticals. But when you come down to, if we go to our manifesto, it's something that is now a little bit about internal culture, but I believe this is really relevant for when you are trying to build a company. You really want to not say only what the crowd is, but who is a crowd. So this is something that should drive how we think, and how investors also should kind of take with them in how to understand the culture within the company. So I will read this. We are a challenger on a quest. We are adapting, and we are here to disrupt and claim what hasn't been claimed. We are here for the challenge, for the joy, for the pride of giving people guidance in their everyday life, and people and brands, supporting brands, building their crowds. We are here for the challenge because that's our motto on how to enable synergies between people and brands. We are here for the joy because it's our motto on how to attract and nurture existing and future talent. We are here for the pride because that's our motto on how to build confidence and long-lasting relationships. We are a challenger on a quest, and the journey has just begun. We are a crowd. Join the ride. And this is for us a kind of new start. This is actually quite an old company. It was founded in 2003, and it's been around for a long time. So it's really important to really get the fresh start and start thinking in a much more entrepreneurial way than has kind of been in these walls here before. So it's a full reset that we are aiming for here, where we are going into much more of a startup culture and really kind of going for the win, so to say. So we are a crowd, and we are reinvigorating the brand, and we want you to join the ride. So that's actually on the next slide. I do apologize, I didn't say that, dear moderators. So we go again to the next slide. This is a little bit of the visual of how we want to communicate visually. Then now done with that, we move on to the highlights. And we can go one more slide. We have the actual highlights. So if you compare Q2 2020 to 19, you see that we have slightly increased revenues, and there has been an organic growth. If you look at EBITDA, just normal EBITDA, it's actually quite a bit lower than in 2019. But looking at adjusted EBITDA, it's actually completely in line with the margins that we have when it's normalized. Q2 20 was a quarter where we took a lot of one-off costs. We took adjustments for staff being let go, as well as shutting down the Swedish office, and we took other costs as well that was related to all of this restructuring in Q2. So therefore, we had a lower EBITDA, but the adjusted was as expected, so to say, and with the continued very, very strong cash conversion. Moving on, I just want to mention that before that we did also a successful refinancing where we extended the bond until 2022, so finances are secured. Significant events, well, I talked about the change management. We are focusing on North America. Refinancing is secured, as I said. And we continue to improve our capital structure and have been buying back our bonds, and we continue to do so. So after Q2, on the next slide, we did change the name, and we have adopted even more measures in order to adapt to the Dutch market and other regulations. This will, though, result in a short-term impact on revenues, especially revenues in the Dutch market, where we are seeing that we are positioning ourselves to be the leading affiliate of regulated revenues and are expecting opening in Q1, Q2 2021. Once that happens, it's going to be very good for us. And now I will give this over to Gustav to go through some of the financial details.
Hello. I will try to give a very fast 5-minute recap about the financials and give you a flavor of our financials. So you switch page to revenue and earnings per development, please. And before Robert rounds off. And if you look at our financials as an affiliate company and as a crowd as we are, we have a relatively stable EBITDA and revenues the last 5 quarters. Revenues fluctuate between 3.2 to 3.5 million euros and EBITDA around 1.8 to 2.2 million euros last 5 quarters. We operate with a strong EBITDA margin around 55-60% historically. And we also see in the graph to the right that we've been going through a quite significant strategic shift from CPA to RevShare, which is our 2 different revenue models within the affiliate industry. So now we're operating with more sticky revenues, so to say, around 55 to 60% the last quarters, which we think is a strength. If we change page to revenue mix and mix by vertical and geography, we can see that we mainly run 3 different verticals, as Robert said. It's the poker, it's the casino, and it's sports betting. And sports betting is going to be one of our development growth areas where we just dipped our toes. The poker is one of our strengths. We have a long poker history in this company from pokerlistings.com. And we see now in Q2 it's increasing to almost 21% of our revenues, partly through World Series of Poker. It's partly through the situation with the COVID around the world that has also generated a poker boom. So that's one of our strengths. And the big vertical we have is historically it's casino. We operate 3 different markets as we classify them in. It's the rest of the world, it's Europe, and it's North America, where we see significant possibilities in North America onwards. If we switch to the profit and loss, please. Just to give you a short flavor, you can read much more in our quarterly report, but it's when looking on the figures, it's important to keep in mind that Q2 was impacted by quite some initiatives. It was both our refinancing, we had huge change management processes with reallocation of offices and restructuring. So that's impacting the P&L in Q2 quite a lot. But as an affiliate company, the revenues comprises affiliate revenues, of course, and then we have a cost base. The operating cost base mainly comprises personnel costs and other external costs, and also support costs. And what I want to emphasize, which is unique with this business model, is it's very, very scalable. So we can have a relatively stable support cost, and we can increase the top line quite significantly without adding much more support costs. If we go to page with the cash flow development, please. What also is unique with the affiliate business and our company is that we have a very strong operating cash flow. And the cash conversion is around 85 to 90% in general. And we operate with very limited net working capital. We don't need to tie up a lot of money to run our business. In a normal state, around 10% of our revenues would be in working capital. Mainly in accounts receivables then. And then also to add on is that our capex is also relatively limited. So that's causing that we have a very high cash conversion in this kind of business model. And the capex is mainly related to building sites and rollout of sites. Now, if we change page to the net debt to EBITDA. So our business, as Robert mentioned in the beginning, is financed via partly a bond, and we have been working the last year with leveraging the company and also decreasing the bond. So we repurchased during several occasions parts of the bond, and we're operating there now with around 2.8 in net debt to EBITDA ratio. We just switch to the last page, financial targets. We have 4 different targets, and they should be seen over 2 to 3 years time from where we stand. And we work with a growth in earnings per share. It should be above 20%. Organic revenue growth around 15 to 25%. That should be our steady state where we're going to work on coming years. And we should have a capital structure with net debt to EBITDA below 2. That's what we're working after as a target. We won't make any dividends the coming years. We're going to invest as much as possible in our operations and deleveraging our capital structure as well. That was a very fast recap of our financials. So I leave for Robert for final words.
Yeah. So let's wrap this up a little bit and then go to Q&A. So if we have then the outlook and growth initiatives on the next slide. So as we said in our Q2 report, we do see a more challenging H2 this year. 2 things there compared to the spring here. We have a much more normalized player behavior in the sense that people are not in lockdown in certain markets. Sweden isn't a really big market for us, and we have also, but although Sweden isn't a really big market, the new rules in Sweden with deposit limits, etc., are gonna be felt, especially for the operators, and as a side effect of that, it's going to be felt for us a little bit. And then we have the Dutch market as well, where we did adjustments to be compliant before the regulation. But we of course have to counter that and then really boost our growth in 21. It's the US initiatives which are now gaining speed, and it's something that I'm really looking forward to towards the end of this year. And we are actively working on having changed the strategy for boosting growth. I'd say that before I came in, this company has been spread a little bit too thin on many assets. So we have now isolated where we will have our big push, and it's much better to push 5 to 10 brands than to try and push 200 brands at the same time. So we have a much more focus on our key brands, where less is more, in the sense that we focus on really building up key assets. And then, of course, we want to continue to grow sports betting. We see huge opportunities there. As we said, we've just been dabbling in it so far. So there is something that I would like to see a huge boost. And then continue to optimize our capital structure, which is decreasing our debt, which is also a focus for us going forward. So with that said, and decently on time at least, leave it for some Q&A.
Thank you, Robert and Gustav. To start off, I'd like to ask, if we look into Q3 and Q4 here, the comps might look quite tough sequentially, given the fact that casino and poker activity has been boosted by COVID-19. But I was wondering if you could give us some color on the general demand, and also how casino and poker stacks up on a year-to-year level.
The only thing that I can of course comment on ongoing operations at the moment is what we see in certain aspects is, of course, summer is all usually categorized by no matter COVID or not, by a little bit lower player activity, and nothing has changed there. But the effect that we saw during COVID, I think we have seen a little bit of an effect as well, where people are trying to be outside more than they potentially have during a normal summer. So we have seen a little bit of drop in player activity, but that was to be expected. And then for us, the reason why we believe that H2 will be a little bit challenging is the adjustments that we are doing and the initiatives that we have taken now to be able to boost growth in 2021. Simply, there is a lot of things changing, and we are moving things around, and you won't see the effect immediately, but I'm confident that we are in for a really good ride in 21 and 22.
Thank you, and I think we have time for one more question here, but obviously there's a lot happening in terms of regulations in different geographies, and I was wondering, if you look into 2021, we know there's new regulations in Germany and the Dutch market per se, and I was wondering if you could elaborate a little bit on the net effect of these regulations from the Netherlands and the Germany.
For us, from this point on, we just wanted to be regulated as soon as possible, since we are compliant, and we have taken these measures in order to be live with regulated operators from day one. We have assets that has incredibly good visibility and rankings in these markets. So for us, it's just to get it live, and then it's pure upside for us as soon as it's regulated.
Okay, thank you, Robert and Gustav, for presenting a crowd and answering my questions.
Thank you. Have a good day. Bye.